Hello, good evening. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of the US markets for the trading of Thursday, the 5th of November 2015. Be sure to visit CFDs.com for your trading needs. Visit www.cfds.com for the spread betting and CFD brokerage services. Alternatively, visit the educational site, which is www.cfds.com. Okay, interesting situation here now on the US markets, and I'm going to elaborate with regards to whether or not we are seeing a potential reversal or a top. And this is very interesting. Now, the way in which I base this on in terms of fundamentals is the actual news flow with regards to Miss Yellen. Now, the key Bloomberg article, as you can read here, Yellen signals solid economy would spur December rate hike. Now, given the actual economic data today and then the data out throughout the week, it certainly is looking like, or ever more increasingly looking like, the Yellen will certainly hike rates. Fed Yellen said an improving economy has set the stage for a December interest rate hike. Economic reports suggest continue to assess or assure policymakers that inflation will accelerate over time. At this point, I see the US economy performing well, said Yellen on Wednesday. Blah, 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 blah. Domestic spending has been growing at a solid pace. Data continues to point to growth in firm prices. Blah, 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 blah. Will be a life possibly said in response to a question from Representative Colin Maloney. Yellen's testimony drove the yield on 2-year Treasury notes high. Blah, 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 blah. Okay, so basically she was hawkish, okay? Now, the question really remains is that the recent rally that we witnessed in the markets has been all based on what? On the expectations that China and other concerns such as Volkswagen, etc., basically would push back the rate hikes, okay? And that obviously has led the rally and has spurred the rally, and obviously there's been talk about negative interest rates, blah, 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 blah. Now, Miss Yellen did actually negate negative interest rates, and also she talked about the Fed putting interest rates back on the table for December. So that was certainly basically interpreted as being hawkish, and that obviously led the price of oil to collapse. As you can see, with regards to the price of oil, we had a $2 drop on the price of oil, and commodities in general sold off. Copper sold off, gold came under pressure, etc. The Aussie and Kiwi came under pressure. So it's all about the dollar, and obviously that led to the S&P 500 falling lower as well. Now the question is, will the rally in the dollar be enough to send or make a potential pivot top in the markets? And that's the question that I'm going to address now. First of all, I'll start off with the German DAX, because the German DAX really has been the bellwether, and certainly has been the index that's led all markets higher, given the fact that you've got the euro into euro falling lower to 1.085. Now, the German DAX certainly has put in a potential topping tail on the fib 61 to 75%, and you have this key diagonal trend line resistance that's held as well. The daily chart itself certainly is showing weakness. As you can see here, we had a bearish, well, not a totally engulfing candle, we were certainly engulfed the previous day's price action. Going to the 60-minute chart, you can see that we are seeing weakness. We've put in a potential double top, and now you have this bear flag in play. The 10-minute chart had this H&S formation, certainly is weak, but we are making a series of lower lows, lower highs after making that double top yesterday, especially given the fact that Volkswagen certainly is back on the agenda, and Volkswagen concerns are at the forefront, given the fact that Moody's downgraded. So again, these are all concerns that are going to hurt the German DAX in terms of its growth going forward. Okay, now going to the actual Euro USD as well, but given the fact that the markets are using the Euro USD, you will see that Euro USD is actually into double bottom support. So again, that certainly needs to be observed as well. Now the VIX. The VIX itself has bounced quite impressively today, putting a bullish engulfing candle. We've obviously held a gap fill level. Going to our 60-minute chart on the VIX, you can see that we clearly have an inverted head and shoulders formation, and we are looking to potentially break out onto the upside. So if that's the case, that obviously generally does signify a potential move higher in the VIX, and that will obviously cause the US markets to come under pressure on the back of Yellen obviously talking about interest rates being increased in December. So these are all bearish factors for the actual US markets themselves. Okay, now going on to the S&P 500 now, looking at a daily chart, and you can see that the daily chart has a rising contracting wedge pattern. Okay, that's certainly, and you have horizontal resistance that's held as well, and therefore that's a bearish signal. Going to the S&P 500 on a 60-minute chart, you've broken out that rising contracting wedge. We did put in a lower high today, and you are witnessing a H&S formation. The pivot high is 2116, the pivot low or the neckline is 2096, so you are looking at 20-point move, and therefore you're looking at 2076, which is gap fill down here. So don't be surprised to see 2076 in the foreseeable future, okay, in which obviously coincides with gap fill support on the S&P 500 as well, which is quite interesting. Okay, so yes, 2079 is gap fill. So that certainly is in play at present. So if I just put a line there, and that's gap fill. Okay, so S&P 500 certainly is signifying a resistance. Now we can cross-verify that with the Russell. So if I go to Russell itself, you can see in the daily chart you are into gap fill, and you've put in a doji candle as well, so you can therefore signaling weakness. And that's the IWN, by the way, which is a small cap. So look at the large caps of the Russell itself, and there we go. Okay, so if I go to the daily chart, first of all, you can see that again we are putting in resistance after closing that gap. Certainly is indicating exhaustion. 60-minute chart, again, same type of pattern. You have this HNS formation, so left shoulder, head, and then obviously right shoulder consolidating, and down we go. So again, these are all weak signs, okay, on the actual Russell itself. And again, everything is a lower high. You'll be putting a potential double top, and the markets have failed to propel any higher thereafter. So certainly indicating weakness on the Russell, and therefore that's confirming weakness on the S&P 500. Okay, now we can cross-reference again another indices. So if you look at the Dow itself, the Dow Jones, if I go to the weekly chart, the Dow, certainly very, very impressive in terms of the weekly performance on the Dow itself, and certainly is coming into potential turbulence. Now the daily chart of the Dow itself again has the same type of pattern, the rising contracting wedge, which really is horizontally we don't have any resistance at present in terms of the Dow, so certainly is impressive compared to the rest. But again, we are indicating weakness because we failed to make a higher high. We failed even to test the previous resistance or previous double top. So again, these are all warning signs with regards to the Dow Jones. Looking at the Dow Transportation, again, certainly weakness. You can see in the 60-minute chart weakness, daily chart you can see weakness. We've really failed to confirm the move on the Dow, so therefore the move in the Dow certainly is circumspect as well. Okay, so certainly two areas that we are seeing weakness with regards to the market. Now, looking at the Wilshire, if I just bring up the Wilshire as well, if I have that here. Okay, Wilshire again, a rising contracting wedge holding resistance, certainly indicating a potential reversal as well. Now, you have this key area or key zone on the actual chart. So again, that's something that we're going to be observing. Okay. In terms of, and the Wilshire certainly is into resistance, the VIX is into support and potentially moving higher. Now let's have a look at the actual Nasdaq itself. The Nasdaq on the daily chart certainly still remains above the previous high, but the question is this a fake out or is it a true breakout? That's the question. Now we did put in a lower high on the 10-minute chart, so again that's certainly a warning sign. Looking at a 60-minute chart, you have this HNS formation, so right shoulder looking at potentially brewing, and then obviously now we go lower down to this 4680 level. That's certainly the downside target on the Nasdaq itself. Now we did have FB earnings overnight, and it was certainly impressive, but nothing enough to send the Nasdaq higher. If anything, it's sold off thereafter, and that's not exactly a good sign in terms of the actual market itself. Okay, now cross-verifying the Nasdaq with the actual biotechs, and you can see here we are into gap fill resistance, and we've certainly held that well on the biotechs and the key diagonal trend line, and it's the same pattern here as well. Abracadabra. I mean, it's just same type of HNS formation on the actual. Let's get rid of this. Okay, so same type of formation on the biotechs, which confirms resistance on the Nasdaq. You have a bear flag formation consolidating within this red candle here, now looking to potentially move lower and close the gap below. So you can still clearly see on the biotechs chart, the biotechs, you have an unfilled gap down here, and therefore you are looking at weakness on the biotechs themselves. So again, no higher high, you are creating this right shoulder, and then obviously looking to thrust lower. Looking at the semiconductors as well, semiconductors you can clearly see on the daily chart themselves. You've obviously gone and closed the gap here. We've put in a potential doji candle. Ever since we've closed the gap, we've certainly failed to move higher, and you can certainly see that we're on the right side of this upward sloping diagonal trend line, which isn't a good sign. Again, you have this HNS formation again, so you are creating this right shoulder and looking for potential thrust lower. So everything is aligning itself to certainly move lower on the actual charts themselves. The Nikkei, you can see a topping tail going in on the Nikkei yesterday. You did rally, and obviously we sold off quite substantially. You can clearly see that there on the actual 4th of November. So nothing bullish ever since the 200 MA has held on the Nikkei itself. So even with regards to Shanghai, you can see that, and also emerging markets as well, you can see that we've sold off in the emerging markets. Now, emerging markets won't like the fact that you are going to be raising rates in December. So again, that's a negative sign. So everything is aligning on the downside, folks, and that certainly is not a good sign for the actual US market or US equities. So given the fact that oil sold off, gold, as you can see here, is certainly under pressure. Copper is under pressure. Global equity ETF or global commodity equity ETF certainly is under pressure. So everything is a risk-off scenario for now. I think I've put forward my argument, and the market will tell if I'm correct or incorrect. For now, be sure to visit cfds.com for your trading needs, and I'm signing off. Goodbye.